Well, good evening, everyone. I hope everybody had a great Thanksgiving and a good weekend. Thanks for stopping by. Hey, Malcolm, thanks a lot. You do exactly, and you can see my charts. Is that correct? Um, Reggie, I'll not be able to help you. Could you PM Rick Sadler, who's in the room right now? I'm not able to work on that. Thank you. Um, okay, let's get started. Chicken Little tells us the sky is falling as we keep ratcheting higher and higher, huh? Okay. Well, disclaimer that trading involves the risk of loss of capital, and that you should not be trading anything you can't afford to lose. And nothing that you're going to hear today is anything other than educational purposes and is not meant as trading advice or recommendations. With that out of the way, let's get started here. And for those who have been here before, I apologize, but for those who haven't, I'm an ex-U.S. Air Force fighter pilot with master's degrees in both computers and in business. I've been an active trader since 1998, full-time trader since 2009. I'm mostly a technical trader, but use some limited fundamentals. I moderate for hit and run candlesticks from time to time as necessary. And I provide one-on-one mentoring. You can go to the website and find out about coaching from me if you so desire. We can have a free consultation. All right, hit and run candlesticks made up of two segments, and then another hit and run candlesticks. The trading room for HRC, Brightway Options trading room and education, and the third pillar is the live trading alerts LTA scanner, and stick around. It'll be a special offer at the end of this presentation. All right, the agenda is going to be not going to be the economic calendar because the folks from Econo Day have linked to the wrong spot and I can't bring it up. It doesn't look very good on the briefing.com website, so I'm basically going to pass. So I expect you guys to go out there and look at the economic events yourself. We're going to go over the earnings calendar, a market overview, trade ideas, a little Q&A that's not stock specific, and then time permitting we'll look at your stocks, one only, and let me know whether you're going to go long, short, or already long or short on that. All right, Econo Day site's broken. I don't like the way the presentation is for briefing.com, and so I'm not even going to waste your time. We're trying to filter through that. Earnings. We've got a number of earnings here. It's not earnings season any longer. We do have a number of retailers still reporting, stragglers, and all these in yellow have greater than 10% short interest. And some of the volumes here are a little bit lower than the 400,000, but not much. Oh, yes, hold on. Okay, can you hear me now? I'm going to see. Okay, I'm going to have to shut off the projector. For some reason, I had an interruption. Okay, let's see if we can get that back without me having to go back out and re-log in. Most of the time, I'm not able to do that. Thanks, Jay. I'll give it about another 15 seconds there. We got the monitor. And monitor 3. We may be lucky here tonight. All right, let me see if you can see the charts now. think we're back. All right. Okay, great. Okay. Probably didn't miss anything except the agenda. The Econo Day site is broken, and in the next chart, what you're going to see in here is those marked in yellow, greater than 10% short interest, potential for short covering rallies. We do have, a number of retailers. We're really at the back end here of earnings season. All right, let's do a market overview. And I'm going to start with the T2122, which is the 4-week new high divided by new low ratio. We're pulling back to about the 50% line, and this pullback zone, 85 to 95, when we get the green up in there, you can see we will do some sort of pullback or pause. Let's mark up some boxes here. All right. When we got up in here, we had a slight pullback and pause. We got up in here, we had a little bit of a pause. We got up in here, we had a little bit of a pause. We got up in here, and now we're having a fairly substantial pullback because we got higher than, well, we only got to about 90. So will it go lower than the 50 to 30? It's possible. Let's look at the S&P futures and bring that up. All right, S&P futures, we basically pulled up and back. We pulled back a little bit here mid-November, did a little J hook and then took off. And Stochastics RSI said we probably would break out, and we did. Now Stochastics RSI says, we might go sideways or pull back. We're in a bullish, traditionally. What do you mean by which line, CB? Are you talking about the blue line is the S&P 500. The green line is the ratio. Raj, if your sound is coming in and out, it's probably your connection. Yeah, I see that, BK. Well, we're set up for a pullback. It's a matter of time. Now, does that mean I'm going to short the market? Absolutely not. We're in a solid uptrend. Am I going to probably take, the green dashed line is the ratio. The blue line, as you can see right here, is the comparison symbol, which is the S&P, the SPX. All right. All it says, if it gets in a pullback zone, is caution. It gets in the bounce zone, said caution about being short, and prepare yourself for potentially going long. All right, so that's the way I use it. It's not going to tell me how deep the pullback's going to be or the bounce is going to be, nor how long it's going to last. All right, let's zip on over here to crude oil before I forget. Crude oil has been bouncing between about 55 and 58 for a while now, but we're having a little bit of a grind. Friday was not a very good day for oil. We're trying to bounce off that $55 level, but we'll see where it goes. Right now, there's a lack of real direction. Gold, well, there was a direction here for gold. Let me put out a 6-month chart. The trend was down. Well, now we're still in this downtrend. We have flattened off a bit. I would want not to be going long or short here. Yeah, natural gas took off. I have no idea what that was all about, but I don't tend to follow nat gas. Can everybody else hear? David, Bob, CB, BK? Obviously you can hear, I think. All right. Well, Ah, okay. Thanks, CB. Well, why would that cause nat gas prices to rise? I would have thought maybe if that's the case, it might go down, but maybe our supplies go down. I don't know. Anywho, that's gold. Gold's in the downtrend until it stays probably above the 50 period moving average here, but just happens to be right about 1490 to 1500. Then really not going to be excited until it gets over 1515. All right, let's go down and look at Dow. Dow is very similar. Let me zoom in a little bit here. Very similar to the S&P, but we're kind of holding our own here tonight. So trade the charts, trade what you see. And NASDAQ's looking like it wants to hold up. Again, we're a long ways before the open. So, and even after the open, we could whip around in a heartbeat. So, just be careful. We are extended, but we can stay extended. If you have got longs out there and you have not taken any profits, shame on you. You should probably be taking some. Take partial profits if you can. And be very cautious of those that that remain in your portfolio that maybe exit at the first real sign of weakness. Friday was kind of a weak day here in the NAS, but it didn't go below the prior day's low. Dow did go below the prior day's low, but didn't go below the breakout level here. And the S&P definitely didn't go below the breakout level and did not close below the prior day. So none of those are really weak. And not necessarily so for the Russell. It went sideways for about almost 3 weeks and then just exploded last week to play catch up. Went up to the 1635 level, which kind of matches something off to the left on the chart. The VIX, down at 1260, we gapped way up on the VIX. There's no fear, but there's people trying to guess on a possible pullback here, I suspect. And if we stay where we are, we move higher, this thing's going to gap down a little bit lower. All right, let's go back to the presentation. All right, let's go over some trade ideas. I caution always to check earnings, even if we're not into earnings season. And I do have a number of longs over a number of shorts, but just be careful. Just because I have a bunch of longs doesn't mean I'm, uber bullish. All right, BE. A very an independent power producer, kind of small cap, does trade 3.6, moves 8% per day, average to range, but that's only 50 cents. But it's a fairly inexpensive stock. It's in the gap. The gap area goes up to a little over $8. So that's one. CVET, probably going to break out of 15 and a quarter, or you can play right here for it to go to 15 and a quarter and see if it can rise up closer to the 22 and a half. It reported back over here a couple of weeks ago and reacted nicely up to that 15 and a quarter level. Probably wait for a breakout above that, see that it's going to work. Plenty of time to 22. Save, Spirit Airlines, been bouncing right up against this 40, one time over here, another time over here, another time over here, and another time just last week. If it pulls back and then does another attack at the $40 level, at some point it's going to break through. And it's got about $6 to run. And I'm not using the 200. I'm using basically the top of this candle here, the body of the gap down. CVS, been on a bit of a tear here lately with the healthcare plans, up and down, and this is a down. If we break out above that green line level, that could be a sign to go long, and I would actually probably have my stop just below Friday's low. Maybe on an emergency stop, you should try the week before so that you don't open up and gap down and go run to those lows and then take you out and then rip back up. If you can stand it, again, once you can get up above these levels in here, the stops will take care of themselves. CBS looking pretty decent here. Looking for it to go above 40.50 and probably has $4 in it. PBYI, biotechs have been really hot lately, and you can see we did a nice J-hook here, about the 50% level, and went up to where? Went up to the prior levels of the gap at the bottom of the top of this gap here, and pulled back. I think we're probably wanting to go higher. Balance of power is pretty good. Stochastics hasn't curled back up yet, but all we have to do is go higher on Monday or Tuesday, and then those will curl right back up at the midpoint line. Cars.com. We're now solidly in that gap, up to $18. It doesn't report again until February, so this one could be one to watch. Not going to knock your socks off with 50 cents a day, but that is 4%. Another one, AVTR, consolidating here after the last move up. Balance of power is not that strong. It's specialty chemicals that are kind of out of favor at the moment with the industrials. But I think it wants to go to 1845-ish. We do have the areas around here around 1775 to deal with, but we do have the pattern here if you're so inclined. Lionsgate has 11% of the float short. Nice consolidation pattern over about $10. I think it runs to $11.75. XLV, again, I talked a couple of weeks now about looking at the sectors and then drilling down on those sectors to find out which ones within those sectors are moving. Seems like Amgen, BIIB, United Health, Humana, that kind of stuff. So these could give us clues as to where to look inside the market, what areas. Stone Company Limited. Never heard of them. However, it looks like over about 41. We're probably wanting to go to 43 and a half. That pretty much corresponds with the highs back here in late March before it went south. And you have to make sure you get a good reward to risk ratio on that one. It's going to be okay. Viacom Class B, Via B. This right here is what I call a buy zone right in here. And I think 2640 is probably in the cards. You might want to wait for a nice pullback here. We had it hugging the 50, then we went up higher. I usually like to try on rounded bottom breakouts to buy the second move up. So I would be very, very pleased to see the pullback, the pause, maybe a doji here, and then the start to move up. Buy that move and then have a stop right below it. That would be ideal. And the last one on the longs is Halliburton. Doesn't report till January. We've been bumping up against this 21 something level. We're at 2150. And I think 2250, that's a buck in it. It could be enough for some people or not. Got to get a decent reward to risk ratio. And there we go. I want to point out a couple of stocks that I pointed out in prior weeks. NTLA was last week, and I said, this is our buy zone, and that was our target. And we hit it 4 days. In the trading days last week, we hit our target from 15 to 17 and 30, which was a little over 13%, $2. I'd take it. And the other one I've been pointing out because I'm long it is United Health. A lot of people see the long candle here and say, I cannot buy that one. And I said, fellas, ladies, watch for a 45-degree runner. We didn't make it all the way to 28 sorry, 286 and a quarter level, which was one of the multiple targets that we had. But one thing it's done, it's gone higher. Let me show you right here. Stock went started to pull back gently, and now the stochastics RSI is going down. All right. Stochastics RSI is basically gathering steam for the next move up, in my opinion. Now, is it just going to go up to 286 quarter and stop? I don't know. All I know is that if we get a buy signal in here, those who are not long might want to think about going long. Sorry if you hear the my son's dog is here in the background. She's not used to being quiet. All right, let's go on over to the shorts. Only have a few of them, and that's because we're in a kind of a bullish market there. All right, AutoNation. Sorry, Aaron's. Sorry. Looks like we did kind of a double bottom here around 57. It does look like it wants to roll over. Is that enough to go short and then have your first target at 57 and then lower on any further declines? Don't know. You'll have to figure that one out for yourself. AXTA, all right, has a little bit more to the downside. I know, about $1.50. And I think that it goes down to the 200. At least retest these lows, which happen to be right at the 200. If it holds, fine, you can get out. If it doesn't hold, you can ride it out. That would be my first target. Right in there would be my first target. Let's go to AAN. Again, my first target would be somewhere right about in there. Cincinnati Federal Financial, did a little bit of a reversion to the mean. If we go lower on this week, again, my first target would be to retest the lows here, and ultimate targets would be lower still. Probably something right around 103. Let's just say that you try to hit this 103.67 area. That'll probably be the rising 200 period moving average. That would be a nice target. Court, one of the biotechs that's not doing well, and it had bad news here a week and a half ago. I think that was their was that earnings, or was that that was related to a drug test, I believe. Anyway, this right here, to me, that's a big long pole, and this is kind of a flag pitted or whatever you want, and as long as we don't violate these areas in here, Katie bar the door to the downside. And look at the balance of power, how it's shifted from solid green until a failed test, and then people who are long are bailing. Total change of sentiment. Foot Locker. Let me get this here. Foot Locker, nice move down, followed by a flagging maneuver, reversion to the mean. I think we're going to go somewhere into the high 30s. I think the target really is, if you're going to go short, is somewhere down on about 34-ish. Notice how the balance of power has shifted significantly. Okay. Home Depot. It reported traders didn't like it. There's the pole. There's our flag. There's the failure rollover. First target, or maybe the first entry, would be when we fail this 218, 219 level. The targets will be somewhere down in here. You probably have to contend with the 200. I would say that this one, if it gets down to 200, is probably going to wobble around it, maybe bounce a little bit. But ultimately, if they think that it's not worth it, it will break that 200. Meritage Homes. Most home builders are doing okay. This one's not. No idea why. Don't care. This one got close to a double bottom in here. And if we fail along in here, look at the balance of power, how weak it is here. Where could it go? We could go to the $63 level. We could even hit around 61 and a half, 62. Let's try that. That would be my next target, somewhere in there, in between these two. Maxim kind of wallowed along when the other semiconductors were rallying. It really didn't participate much. Then we did a bit of a sell-off. We did a reversion of the mean, got up to the 200 and the 50 now. It looks like we want to try to roll over. A retest of the $55 level is probably in the cards. At least that's what I'm seeing. Teradata, TDC. Gap down, went up to the top of the gap. Really can't seem to get under it. Balance of power really went negative. Potentially, you could go short now or wait to 25.85. With a retest of this 24 would be your target. So I would say that this would be your target. Maybe intermediate targets along the way. WP carry, whoopie-doo. Down move, reversion of the mean, saw what happened. It went down to 200 and it's wobbling around there. And that rally bounce, whatever you want to call it, looks like it's failed on Friday. And the bounce occurred around the 200, but I think it's more doing with this price lows in August. And our ultimate target would be somewhere down here around 80 and a quarter. All right, I want to point out CCEP. CCEP was identified as a short last week. We actually went down to the $50 level and it stuck to 50 and then bounced. Well, I leave this on as an example of round numbers and things like 100, 75, 50s, 25s. Those are just psychological numbers. And I think it got low enough that people said, you know, it was at the high 50s. Now it's down to 50. Is it cheap enough for me to start nibbling? So value investors will start nibbling. Doesn't mean they're right. Most value investors don't mind being a bit early. They'll buy in dribs and drabs. All right. So much for what I was looking at. Let's go and look at the week ahead again. All right, I did say we would have a offer for you guys if you'd stuck around. For those who have never tried it, there's a 60-day trial, not 30 and not free. It's $49 for either the Hit and Run Candlesticks room or the Right Way Options room. 2 months of either one. I tell you what, I found them in 2009, and I'm not going anywhere unless they kick me out of here. I love the atmosphere. I love the traders. I love the ideas. $49. It's $25 a month. Probably cheaper than you could go out and have a dinner at Outback for one, Outback for two. And I think you could learn and earn enough to pay it off. McDonald's, I put down about a $10 for two. All right, if you want to try to follow me, I'm on StockTwits under Top Gun Trading and YouTube under Top Gun Trading. It's simple to remember. All right, I'm going to open up for not stock specific questions. If you put out a question on a specific stock, unless it's an example of what it is you're trying to ask, I'm not going to answer it and I'm not coming back. Can you tell me your thoughts on the bullish momentum pattern intraday? Are you talking about a specific pattern or what we're in at the moment? So you're looking for, okay, that's a good example. Okay, let's bring that up. Now, what I'm going to do is I'm also going to bring up Ameritrade here and Ameritrade there. See, what I like to do when I'm trading is I will look at that intraday chart and look at the daily and see where we are. Now, this one obviously doesn't pan out because we're not active for the moment and we already got up here and the daily looks like it's probably trying to roll over. I don't like to short stocks that are in uptrends like this because, you know, TD Ameritrade's being bought out. Let's go here to a 5-minute chart. And let's go to Ameritrade. All right, let's go back a few days. All right, I guess if I think it right there, it is on the 25th. This was the day that we gapped up, and you were looking for a momentum pattern. Well, I don't know that there is a momentum pattern other than, for me, that was a J hook. When we gapped up from down here, 48, and we gapped up to there, that's an implied candle. And we did a pullback here, bullish pullback, didn't pull back very much, and did basically a J hook. Sharp move up, pull back, set a low, bullish pattern, and go. You notice how it basically ran, did another little mini J hook and whatever, again on a 5-minute. And that's all between the open and about 11:15 in the morning. All right, so right in here, this is basically riding the T-line on a 5-minute. This is a swing trade with J hook. There right there is a consolidation. There right there is another J hook. They happen all the time. That's too early in the day to be bullishness for doing a day trade, Patrick. Did you know that most of the run is in the first 2 hours of the morning? So if you're saying that it's too early, don't know what to say. All right, let's move on. Reggie wants to know where to put a stop loss in a 3/8 cross. Well, first of all, I tend not to use 3/8 crosses. You don't see the 3 on my charts here. A 3/8 cross for me is something that you might want to use after hours or pre-market to help find candidates. That's the way I use it. Isn't necessarily the way Doug or Ed or even Rick use. Now they use a 3/8 cross. What I'm, let's see. Let's go to some of the longs here. Let's go see if I've got something back here. All right. Well, back in here. Back in here, we had the 3/8 cross. One of the ways to one way to establish a stop loss, a nice recommendation, is to look at and see where the volatility stop is. Now we use volatility stops of looking back 10 periods and 1.5 standard deviations. That of the average to range. That's what we use here, and I use it as a nominated level where they think that it should be a good stop. And in fact, in those right here, that would have been a pretty decent one. CVET. Notice how we did a crunch. I've got to use something that's got a little bit more of a J hook here. Hold on a second. Okay, CVS did a move up and a pullback, and right in here, I'm going to bet you had a 3A cross. So the reason I'm saying that is the 8 starts to crunch down on the 17. I'm sure the 3 had to get below the 8 because it's a very, very fast indicator. And probably they had a crunch or a cross in there, and the long would have been somewhere up in there or right in here, either one. Now, where the stops are, still use the volatility stop. Now, on the pullback, before you would have gone long, it violated the volatility stop intraday, but didn't do it on a closing basis. And so therefore, the volatility stop stayed green. And these are decent spots to use for at least nominated levels to use for your stop loss. And I'll leave it at that. Come on in the room. Rick and Doug will do a really good job of explaining it more than I and in real time. Okay. Kevin, can you explain what happens to a stop loss order on options when it hits your price? Does that become a market order or what? Do you use these at all? Well, I don't set them the way Doug does. Go in. If you're not a member, join the trial. Go in and ask Doug to explain. He does a great job of explaining it. I tend not to use it because I'm sitting here in front of the markets. What I use is pretty much a stop. If I get to the 40 to 50% loss on an option, if it's a swing trade, I'm out. And I watch it and I say if I'm towards the bottom, I'm looking at my stochastics RSI and whatever on a 30 to 60 minute chart. If I think I've got a possibility of bottoming out, I'll try to stay with it as if I possibly can. But if I hit my 40% down, I'm gone. But no, I don't put in stops. I put levels on markup on my chart, and when I get to there or 40% down on my options, I'm gone. I give it a chance, a lot of room when I've got options. United Health, I gave it a lot of room back in here when it pulled back. I've got $240 January 2021 calls, and it pulled back here. Now that I'm way in the money, it doesn't really matter. I can give it a lot more room. I give it probably price-wise down to the 17 and still be quite fine. Okay. Is there a precise exit condition with trading T-line or trap patterns? Other than using the volatility stops, I don't know that there's one that's precise. These are pretty darn good. Doug worked on it for over 2 years before bringing it to our attention. So I've looked at it. I've used it. I use them as nominated areas. It's not always perfect, but if you have nothing else to base it on, it works pretty well. So if you're looking for T-line or the trap patterns, that would work. Judy asked some while back, you recommended a stock for my mother. I've done that a lot. SPLV. Now, it's probably not one to be getting long in now. And here's why. The low volatility are primarily dividend payers. We're getting the dividend payers with the rising rates are not going to be the place that people are going to want to stash their way in, which is why a lot of the REITs are seeing some weakness as well. So you see here the balance of power. This is a area weekly chart, but from January 19, let's call it this breakout area here, to where we are at the moment, that's 19% on some very low volatility. Now, I've had my mom in here for a couple of years now. The breakout here in early 2013, around 30. Just almost a double. Very, very low volatility, except when we had the big, huge sell-off scares in late 2016 and in 2018. So that's the best I could think of. Maybe there was another, I don't know, but SPLV. But look at what we're doing here. Let's go look at the weekly again. See how we're starting to top out? And balance of power is basically flat. So I don't think that's the trade anymore. Now, it's not time for me to sell. I took some profits over here as we pulled back, but I still have some, and if I get below this 56.50 area or whatever, I'm probably out totally. You're welcome, Judy. Bobby M wants to know what intraday time frame is good prelude for daily candle formations. Probably, in my mind, it's a 15-minute candle. But early in the day, let's go look at Loco. Loco was bouncing. Let me go to the daily and show you real quick. This one moved up sharply on earnings, went sideways, and then broke out. On the first day, which would have been, what, the 1st of November? Can I go all the way that far back? Oh, I can. Okay. There's a 15-minute candle. Almost the entire move for the day was in that first 15 minutes, which is why I was telling Patrick, if you're waiting, if you're not using the 5-minute candle and whatever, you're not really using the intraday candles. But if it's on a sharp move, now that's, again, the way I trade is I want the sharp movers. I want it to be zooming in my direction and hurry up and get out. But some people just want steady Freddy. If you want steady Freddy, it'll be a whole different thing. Maybe using a 5-minute or a 15-minute candle. But the intraday 15-minute works really well. And basically, this would kind of stabilized. It had to remember, digest that big move, and we're trying to get above that 1550 level. And there we did it at the very beginning of the day on the 25th. And this is the Steady Freddy 15-minute candle. And there again on the 27th, Steady Freddy 15-minute candle. And then on the 29th, we started giving it back. The whole market did, is a fact. All right. Yes, Pat, Doug does have great videos. Share moving average or volume trend line with us. Cannot find that and don't recall the specifics. Sorry, Bill. I do remember sharing volume at price. And let's look at something like, let's look at United Health. Let me go out to 6 months. And when we were down here at the bottom, I said we would probably come up to this level here where the most volumes were. And then we wobbled around it. We went up to the next level that I marked up here for 255, which was the top of where the volumes started to really dry off. And then I went to a volume here at this level around 265. Then I went to kind of the two here, the two sides of 275. And look, we kind of wobbled around 275. The next levels here are, that's 275, and the next one here is 280. And big stocks tend to move down or up to these high volume price levels. Yeah, thanks, Ed. I was wondering the same kind of thing. SP says, are you holding United Health options to a particular target since you're in the money? No, I'm holding on, and this was kind of a position trade. I originally had originally, back a long ways, whoops. I had the 2019 calls, and I rolled them out to 2020, and then I rolled them out to 2021. This is a long-term position trade for me, and I'm going to show you on the area chart. Been riding it from way over here. Like I said, buying, I think I had 2019, then 2020, then 2021, right. But somewhere right in here, I picked up the 2019s and made a nice set of money in those first couple of trades. However, over the last few months, the year, there's been a scare. Again, this is the technicals and the fundamentals kind of competing with one another. The technicals said it's weak. The fundamentals said, do you believe that the Democrats, one, are going to get in power, and number two, if they do, will they be able to do anything and go to a single-payer system? Well, I don't care about number one, because on number two, I don't think the U.S. population will we can't stand the cost of it and whatever. Now let's go from a weekly to a monthly chart. And if I would show you, we move here, go sideways. Move here, go sideways. Move here and pull back. In the longer run, this is nothing more than a bullish pullback. Again, that's what my time frame is, way out there. It's not short term. It's not a swing trade of 3 to 5 days. So therefore, do I have a target? No. I have the target until it shows weakness, and then I sell. Yeah, I'm sorry. It's really, because it's not a swing trade, I really have to give it lots of room, and I can't artificially establish targets. Otherwise, if I did that, I'd probably be getting out at 275 or so, and I would miss the run. All right. Carol wants to know, how do you use options straddle news? No. The problem is Coop. I don't use straddles, and here's why. The market makers know more than I do. Yeah, that might be BK. I'd like 312. Then I'd like to get up towards 312 and pull back. Then I can roll out and take some money off the table too. Coop, they're going to price in the move plus a little bit. Now, if they miss or really blow out earnings, then normally it's the misses that cause the problem. You're going to get a wild swing and a wild movement. And my problem is that if you straddle the stuff, don't you have to move basically everything to the up or to the downside that they priced in and get out of that premium before you can start to make any money? So even if you do make money, it's not going to be very much. And to me, that's not the smart game. I play after earnings. Then I know what I'm dealing with. Coop may not be a good one. What is coming up here this week? Tiffany was coming up. Hold on. Oh yeah, let's go there. Was it Con? There's DCI, Coop, Emo. Campbell Soup has, I think it still has high short. Let me double check. There's economic calendar. Yeah, it's 11.6%. So let me update that. All right, so if we could get over the 48.33 level, we're probably going to get a rally. So what I do is, instead of trying to play a guessing game where I don't have an advantage, where I have the advantage is I'm nimble, that when we get up in here, I could go long, or if we get down in here below, I could go short. Not yet, Kevin, not yet. Does that make sense, Carol? Oh, sorry, you were unclear. I wasn't planning to use a straddle. I was asking what it means. Okay. So basically, you're in the middle and you're buying. With an iron card, or you buy sell calls and puts on either side of an extreme, and you're betting that it's going to move less than the market maker has predicted. That's a bit dicey around earnings the way we are at the moment. You're okay there, Kevin. It's just not a smart play. But basically, is they're pricing options to move greater than this amount, plus or minus a. Well, let me go over to Campbell Soup real quick. Hold on. I've got to sanitize my charts here real quick. I want to show you everything of what I've got, my account numbers and stuff. Okay. Here's Campbell Soup. Let's go to Analyze. And earnings are, did we say that's Wednesday, this week? 68% implied volatility. They are pumping in a lot of premium, and it doesn't really come out. So that's plus or minus $3. So what's going to happen is that this is actually going to be 50, and 47 minus 3 is 44 or so. If somebody's going to do a straddle, maybe they're on the side of the market makers. I don't know. But if you're buying that it's going to move outside of those, there's a 68% implied volatility. So they think it's going to explode either way, or they're just covering their bets. They don't know. Yep. Thanks, Glenn. I'm not doing a great job. I'm just having a senior moment here at the moment. Time. Okay. Come on in the room and ask Doug. He can do a better job of talking about options than me. I tend to only do directional options mostly. Okay. All right. We are now open for business with stocks, one and one only. Tell me whether you're long already or short already, or you're looking to go long or looking to go short. And we've got probably about 20 minutes or so here. Wet my whistle here. He does look like a pretty decent short, and it kind of fits the bill fundamentally with the sell-off in dividend payers. Probably got a break below 37, and then it's probably only going to about 35, 35 and a half. It's not going to be one of those movers and shakers, smokers, but it may be one that your heart can live with. Carol wants to look at HEI long. Heiko. Yeah, Heiko's kind of changing his character up to an uptrend now. First target would be about 133.45. When you get over this 133.45 area, I think it wants to go to 143. This is not a bad one, Carol. Thank you. I like that. Lennar. Reggie, Lennar's had a pretty decent run. In fact, most of the residential construction, they're going to have some headwinds here, fundamentally with rising interest rates. Let's go look at a weekly. And it still looks okay, but let me go back to the EMA only chart. I plot the 8 and the 17, and we were in a solid uptrend from August. A massive smoke and rally. But then we got smacked down here in November, and we haven't recovered from it. I can see that without going to the EMA only chart. You could also go to a 3-day chart. You can see how it's kind of petered out. And there's the weekly chart, and it's kind of dying out. Could it resume a little bit? Possible. But with the backdrop of rising interest rates, I don't think people want to go long. Okay. John M. wants to look at Starbucks long, bottom fishing. Well, I don't go long on stocks unless they're making higher highs and higher lows. So what I would want to see, Starbucks was in our portfolio for a while. It earned the right to leave my wife's portfolio when it changed character back here in September. There's something going on in Starbucks that's not right, and it's reflected in the price. I'm going to want to see higher highs and it establish a higher low and then start moving back up. And then it will earn the right for my money. Until then, all bets are off. I just sit back and wait. Because if these stocks are going to run, they're going to run for a while. They're not going to run for just 1 or 2 days. Let's see, Starbucks. SP wants to look at Twitter. Twitter reports in February again. Here's the problem with Twitter. Till it gets over 32, I'm not interested. That gap here is formidable. I'm going to want higher highs, higher lows, above probably a close above 32, and then look for an entry. Until then, it's just on the watch list. Yanko wants to look at it at AMD, right? AMD's had a pretty decent run. Let's look at a 3-day chart. You can see had a really big run from about 10 last year, then sold off. and kind of went nowhere for a while, and then we picked up again. AMD is knocking it out of the park when it comes to retail traders and their chips, their CPUs, their video cards. They're doing okay. They're competitive with NVIDIA, except when you get to the high end and they don't have anything up there. They're trying to, but they don't have anything. And NVIDIA is a much larger company, and then Intel's hanging around the corner to get in. So now that's the fundamental. I would say look at a 3-day chart, and when it gives you a buy signal, you could probably go long and set your stop at the volatility stop. Okay, JM wants to look at Avalara. Probably want to break 80. The one problem we've got here is the consolidation over here to the left. Let me look at one other chart. Yeah. You see over here, I'm looking at the volume and price. There's an awful lot of congestion, 82 area. So if you're happy with it going to 82 or so and then it kind of stalling again, then okay. Take some profits there. CCL. All right, I'm going to go ahead and cut this off. No more symbols, please. I got to get some din-dins. I'm going to waste away. All right, CB or CCL. What do you see here? Over 46, it can kind of go up into this 47 level, but I've seen better stocks out there than this one. Reports at 12.19. I don't know. When I have to look at something pretty hard to try to find out what it is, it's usually time to just step to the next one. Next. So this one's kind of tough. It's kind of all over the place. Really true. I'm sorry. Rickster wants to go long. QRVO. You're looking for a 45-degree run. Actually, Cuervo's 45-degree run happened right here. Usually the 45-degree run, Rick, happens after a big move up, usually on earnings, and usually if they have high short interest. Let's see if we've got that. Okay. QRVO. Nope, only 3%. So they probably surprised here. The expectation, it's kind of neutral here. Consolidation, gap up, 45-degree run. Will it run 3 days, 5, 7 days? Then after that, you're probably into more of a gradual incline. So to me, that's not setting up probably for a 45-degree runner. We've already had it. 45-degree runs for me normally happen after a big gap up or a long candle like Loco. See how we had the big candle, and then again it didn't happen. All right, SRNE. Nice consolidation in SRNE. Number one for me though. This would be a speculative play. It moves 9% a day. That's only 26 cents, but it's 9%. It's a $3 stock. It's a $3 stock for a reason. It's probably all speculation. So if you like it, go for it. But it better be money that if you wake up tomorrow, it's bankrupt, you're okay with that. Roku. Keep searching, CB. I'll give you one. Roku came back up here and retested this 169. Really surprised. After the earnings gap down, I was really, really surprised. And the fact that, see how we held the trend line back here and then we failed? Most stocks don't recover this quickly up to those levels. We've established ourselves a new trend line though. And I'm going to kind of eyeball it as kind of right here, probably parallel to that last one. And it went up into that area here. That was already marked up as my area for resistance. Get over 169.17. It could be a long. Glenn wants to look at Twilio. TWLO. You said Twilio short. Possibly. It did have a greater bounce than I expected, but it did only go up to the 106 level. Would have to break below 101, and then the possibility this high volume doji level here around 95 and change, call it 96, that could easily happen. Now it moves $3 a day, 3%. That's pretty large for a $100 stock, but I bet you the options are going to be pretty shitty. Yeah, but they will fall out of favor at some point. Sam B wants to look at Costco long. Well, Costco's running out of juice at the moment. I like to wait for Costco to do its deep dive when analysts come over and badmouth it and it sells off. I think first time, well, one of the first times I jumped into Costco was after it sold off after earnings. I jumped the gun, but it's more of a fundamental play than it is a technical play. With Costco, wait for the pullbacks. Go to a 3-day chart. See how we get the pullbacks. This one just kind of blah. And stochastic RSI is not helping me out at all. Okay, so it's not time yet. I was in Costco, made pretty good money at Costco. Have not been able to get back in, although probably could have gotten back in October. Probably should have gotten back in October. Dolores wants to do Visa. Visa's next target's right here, 187. That'd be an all-time high, wouldn't it? Yep. God, now you got to find a way to get on board. The problem is, if it keeps going higher, where's your stop? Right now it says the stop's down here at 181. That's down $3.20, and the first target is less than $3. So that's a 1-to-1 to the target one. I don't like that. I want about 1.5 to 1 to target one, so that I can almost be guaranteed that I'm going to hit at or near target one, and I'm going to have a profitable trade. So not enough rewarded it for me. Probably down here, 181, or here on the breakout would have went over 183. 183 would have had about $4.50 in it, and the vol stop probably below that one, below the day before, $3. Yeah, 1.5 to 1. That would have been just enough to fit my style. What your style is, I have no idea. Oh, you bought at 180, Dolores? Hold on. Intel, yeah. Okay, then you're perfect. I would just say you're already long. Keep raising your stop. Now, you notice that on Friday, After Friday's trading, the volatility stop did not go up much. Now, if you're 180 or 184, you may want to think about, at some point, the first sign of weakness, take at least some profit. If it starts to sell off, I could probably, let's go to a 60-minute chart. Below 183 and a half could be a stop. Maybe 183. But I sure don't see it being 181 and a half. Where am I? BK wants to know when my long scan is the 817. No. My long scan really is a J hook, more complicated than that. We're looking for move up, pull back, and move up again, or round and bottom breakouts. Guild, that's where we were. Guild is consolidating right here, looking for a pop out of the box. Yeah, anything over about 67 and a half. You're going to have to see what it does at 68 in a bit. Let's see, a 3-day chart. Does it tell us anything more? And I'd probably want to go over to here. Yep. 68 to 69 level is going to have some resistance. Don't know whether it'll stop or not. But you have to be aware that it might wobble, pause there, just like we did here. But it doesn't look half bad. Stochastics RSI would be better if it was down here below and coming up. But it's still kind of up here. It's not helping us any, not hurting us, but not helping. Herman, I went over Twitter already. Amazon just kind of lollygagging around. Let's look at this area chart. You see this? Let's look at the EMA only chart. Amazon, go somewhere else. It's not a long, it's not a short, it's just kind of bleh. Now, what could change that? Get it over 1,850. Then you have what I call a void. That doesn't mean zero trades. It just means, okay, here we go. From right about in here to that top right in there, it's going to probably step up pretty smartly in there. So watch for 1850. I put an alert there, and when it gets there, evaluate it again. David wants me to show my stochastic settings in Thinkorswim. I'll actually show you to you right here. They're both the same. RSI period 7, stochastics period 7, percent K3, simple. You said, whoa, simple? I thought you used exponential moving averages. Yes, but I found simple works better here. Don't know why, it just does. And percent D, if you get it, is period 3, simple. Now, Thinkorswim. 7733, simple. I use Wilders. So, studies, edit studies, stochastics RSI, sprocket, 7 RSI length. I don't care about overbought, oversold. It's just in there. I use Wilders. Don't ask me why, but I've played around with it, and that's what seems to work for me. I use the close, and I use 733. And there's 7733. Make sense? Okay, let's keep moving. Carol's trying to sneak a second one in on me. You thinking I may not notice, huh? Next era, kind of in no man's land. Again, energies are not going to move you regulated utilities not gonna move a lot. It does move 1%, about $3 a day, but over 239 or say under 232. But in town there, it's bleh. And Bill Bowers, did you put another one in on me? I don't remember that one. AYX made money long back here. Probably not interested until it gets over about 120. It's starting to make higher highs and higher lows, but there's this stuff right here, 120-ish, 119 something, a little concerning. So make higher highs, higher lows. It will have cured itself. Pull back, buy signal, go long, stop down below. All right. Neck is killing me looking up on this screen here. So look here. We've already looked at Amazon. I see the first level resistance around 90 an engine. You see 95. You see this right here. 70. First level is right here at 78, 75. 95 is even above this swing right here. Oh no, that is a swing. Sorry. A little optimistic because there are people back in here who bought it. Might still be holding because of the gap down. And all along the way, I bet to run into sellers. Because the people in here who bought that were still long will say, Lord, just get me out, break even, and I will never do this again. Never, 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 I promise. Eventually, you'll eat them all up. Now, the green dots here are the volatility stop. It's where? Right there. It is 2 range period of 10. It's the average range. A multiplier 1.5. That's standard deviation. And sure. BK, do you use Thinkorswim? Or do you use TC2000 or something different? Okay, I'm going to do you a big favor. Would you be interested in being able to plot these dots, volatility dots on Thinkorswim chart? I'll assume the answer is yes. Let me find it. That was on A1. I'm going to post 2 of them. One of them out there is a PDF. One of them out there is in a Word document. Just copy those in, save them as a study, edit studies, volatility stop right there, and all those settings are in there. You're welcome. That is just an example of stuff that we have in the room. One of our members took this from Doug, did him in Thinkorswim. He attempted to use what he thought was in Thinkorswim to replicate it, and we had trouble with it. And Steve Coombs, one of our members, ran out there, and in about a week and a half, was able to basically replicate it. And I helped test it to make sure that it was accurate, and it is. And this is what happens. The room shares all kinds of stuff. They share trade ideas. They share work. I mean, it's nice people. So come on in and join us. I mean, we're one big happy family, really. All right. I want to say thank you very much for showing up tonight, and I will post the recording out there on my YouTube channel as soon as I can get it rendered and uploaded. It'll be on youtube.com/Top Gun Trading. All right. You guys have a good one, and we'll see you around the flagpole. Think about joining. Aloha.